watching the Harav Benjamin valuation. Today's valuation is from Walmart.com, as they have recently reported their Q1 FY22 earnings. Walmart is an American multinational retail corporation that operates a chain of hypermarkets, discount department stores, and grocery stores from the United States, headquarters in Arkansas. Walmart recently has tried to compete with Amazon by going online and having retailers, mums and dads at home, sell through the Walmart website. Walmart's advantage over Amazon, where their competitive advantage is that they can send items from each one of their stores. They have stores all around America. On average, one store is 10 miles away from an American. Now let's check out their quarterly results for Q1. Let's see their income statement to start off with. First, we've got some revenues. Revenues coming in at 2.5% growth from year on year. So that's this figure over this figure. That's pretty solid growth of 2.5%, close to 3%. It has slowed down a bit from 2020, but this is a COVID, obviously, and sales for staple goods were on fire. Historically, it's a bit lower. It's around historic levels. So I'd call their growth rate at about 2.5%, 3%. Gross margins 25%. That's pretty consistent, 25%. Now let's go down to the bottom line. At the bottom line, this is where things come different. 1.5%, while they're usually getting about 3%. Reason for this is inflation. Sales have not been able to lift prices to combat the rising inflation fast enough. So expenses are rising faster than they're lifting prices. So this is just for this quarter alone. It's at 1.5%. Hopefully in the future they can get it back up. Now let's go off to the cash flow statement. Cash flow statement we have for this quarter. Cash from operations is negative. I think this is a reason, again, inflation. Their expenses are rising faster than they can increase their prices. And this is also a once-off. Look at that. No other quarter has had that. CapEx pretty similar, pretty consistent with normal. Then we have sale. Let's see what they're doing with all their received money. So after CapEx, everything after CapEx is all owned. This is all, if you're an investor, this is all comes to you. So what we got is sale, plant and equipment, made some money. Cash acquisitions. It means they bought items with your money. Now they're investing also, but this is all minor amounts. So let's look at the major ones. Repurchase of stock. That's what you want. You want them buying with their excess cash stock. Then we got dividend paid. That's money coming into your pocket. So all these items are pretty much like the way you think of dividends. That's what they are. But it's like you investing again. And then we got commons again, dividends, and cash from financing. It actually is positive, which is interesting. So it means that they have issued debt. Why are they issuing debt? This could be because of the negative cash from operations. So they're getting debt there. They brought out a loan to cover their loss for this quarter, which is not good. Let's hope that doesn't continue. Overall net, see, look, they're still negative 3 million from net cash flows. Because look at that, they've lost. That's 7 billion. That's not what you want. Now let's go straight to the valuation. We've only got 30 seconds. Let's go check out growth. Let's check out their growth. Growth is at 4 to 5%. We have 4 to 5%. I'm going to call it 3 to 4 just to be more conservative. 3.4% growth, 3, 4, and 5% growth. These figures are coming from the averages. So we've got their profit margins are pretty safe to say at 3%. 5 seconds left. Let's get the valuation out of the way. $35 is what I call it.